We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Dan Malloy, who's CEO of SiriusPoint. Dan, welcome.
Thank you, Richard.
So the global economic situation is top of the agenda for a lot of discussions here in Monte Carlo. To what extent does rocketing inflation, rising interest rates influence decisions that are made at insurers and reinsurers?
Well, we're seeing it come from insurers, reinsurers, and people who are looking at investing in the space non-traditionally. So, looking at SiriusPoint, we have a significant part of our portfolio that is, casualty business. And prior to COVID, social inflation was a real thing. It seemed as though that fell out of the headlines. And what we have now is emerging economic inflation, where supply chains and the war in Ukraine have affected ability of people to get components, parts. And we certainly see that in areas like auto, where people who are writing motor, or auto as we call it in the US, are faced with dramatically increased repair bills. We can't forget social inflation, though, because while courts did shut down or go virtual briefly, that is a trend that we believe is real and continue. We have to keep that in mind as we factor in our pricing and our reserving, and we try to share our thinking with our clients and our brokers who are showing us business, so that we can be level with people. So whether it's a new client, an existing client, an MGA partner, a broker, we are looking at what we see are these inflationary trends. We also have to bear in mind that it's not 100% certain in people's minds that inflation is going to continue at this rate forever. There's a probability that we're going to be, leaning into a recession. And in fact, some of our clients are pointing this out, where, for instance, the cost of lumber, which is obviously a major part of a home rebuild, is down significantly from a year ago. So lots of moving parts. And we also have to remember that inflation and rising interest rates also play on the asset strategies. We certainly saw that with the industry reporting mark-to-market losses on their credit portfolios in the first and second quarters of the year. But what that does mean is new money that's coming in is being reinvested at rates that are meaningfully higher than they were a year ago. So inflation and interest rates give and it takes away.
So a lot of talk about risk appetite, both from an underwriting perspective, but more interestingly, perhaps from an investor perspective. How do investors view the insurance industry at the moment?
Yeah, I think one of the themes as interest rates were low and stayed low for a period of time, that the insurance industry was a diversifying, non-correlated asset class for investors. Clearly, as interest rates change, investor appetite might shift, but we believe the insurance industry is still an attractive class of business to be in. We're investing in our business. We are partnering with MGAs and startups throughout the food chain of the insurance business. And we think that good people with good ideas and are able to execute on them represent very attractive opportunities. And we then buy reinsurance on a number of these programs. So in whatever form and from a number of different investors, we can offer what we think are very interesting and attractive returns to people. Their own metrics might change, but again, it's a spread over risk-free that people are looking for, as opposed to an absolute return in many cases.
Let's talk about those MGA relationships. How do you manage them, and how important are they in the ecosphere of insurance and reinsurance?
Well, I think the headline number, for instance, is the E&S space has grown to somewhere between $70 and $100 billion. And I'm not going to contest that number. I mean, it's significant. Certainly, having been through a few reinsurance cycles, the E&S space expands and contracts as the standard market either becomes more aggressive or goes through a period of retrenchment. Right now, the specialty space, the E&S space, is very significant. MGAs are an interesting way to participate in that space. We like it. In our minds, one of three ways to participate. You can either make an acquisition, which not every acquisition is a match made in heaven. You can go and build your own infrastructure, which takes years, or you can partner with specialists. And a lot of these MGAs are top-notch underwriters who have decided when they look at themselves in the mirror in the morning that they want to take risk on their own business. These are people who are generally coming out of a traditional underwriting company in many cases, and they've looked around and said, I want to be an entrepreneur. I want to participate in the economics of my business. And those are the people that we really seek out. In a number of cases, they're people who we reinsured. And we're able to partner with them as they decide to become masters or mistresses of their own destiny. So it's exciting. It's exciting. But it carries with it risks. You have, not everyone who is a great underwriter is necessarily a great business person. So what we're doing is, as we have expanded our MGA partnerships, and as opposed to having 100 small relationships, we're targeting a smaller number of very significant ones. And we're actually teaming up with our MGA partners to attract additional talent, new lines of business, new strategies, new people to what we consider really good business people who are very profitable underwriters.
So how does an MGA prove its worth to you?
Well, it takes a few ways, because we from someone who, and in many cases, it's someone we know already, someone who has an established track record. In a perfect world, it's someone who has a track record that is easily identified and can be validated. In a lot of cases, that isn't necessarily the case. So we're a big believer in, if it's not someone who we know and who we could track their results clearly, is seeing if they have a following in the reinsurance market. I mean, many specialist underwriters are people who have built up books of business using reinsurers as partners. And in a lot of cases, they can bring with them those reinsurer relationships, and that serves as a validator. I mean, those reinsurers to us represent third-party capital. We write 100% of the risk. We take an underwriting first perspective. We want to enter into a transaction with an MGA where we want to be a significant risk taker. We don't view it as a pass-through exercise. We have a significant capital base, and we have a lot of talented people on the underwriting, the actuarial, the claim side, the business management side. So we want to be able to use those skills to help our MGAs be the best partners they can. But for a new relationship, the idea of buying reinsurance does resonate, so we can effectively mature the book with not only the MGA as partners, but the reinsurers as partners. So that adds a whole new dimension to our business, as opposed to being a reinsurer taking on other people's risks. We're writing the insurance business in partnership with the MGAs and turning to other reinsurers as partners.
Dan, thank you very much indeed for talking to us today.
It's a pleasure.
For AM Best TV, I'm Richard Banks.